This demonstration in London was aiming to highlight how major construction companies are making huge profits while trying to cut the pay of building workers and electricians by 35%. Many workers are now being told that if they don't agree to these new deals, they'll be sacked.
I'm appalled that they could even think about trying to introduce a pay cut. I mean, it's a case of, if I do that, I've got children to feed. It just completely ruins my life, really. I'd end up having to maybe retrain, look at other professions just to try and survive.
From Manchester to Madrid, from Belfast to Budapest, the story's sounding the same. Growth will slow next year as the cuts take hold, and along with that, unemployment will soar.
We've got no doubt whatsoever that unemployment could rise even further, because what we've got is an economy that's not based on growth. It's an economy that's actually cutting jobs, undermining consumer confidence. People will not buy in the current circumstances. They're worried sick.
Spain's the most staggering expression of the European illness, with the jobless rate stuck at over 20%. But only Germany looks to be on top of its problems. In one way, these findings from the OECD only reflect what's already known, which is that indebted European countries have so little money and so few ideas about how to grow. But the rise in unemployment puts more pressure on, because the more jobless people there are, the more benefits they claim, and the harder it becomes for sovereign governments to reduce debt levels. Of course, in state-funded as well as private sectors of Europe's economies, the drive for cuts is led by fear governments have of what would happen if the debts became too much to bear.
Imagine an event in the euro area, which could be a sovereign default or could be a major banking event in the euro area. That would trigger, if nothing is done to stop it, a significant negative impact, which could take different steps, hitting the euro area itself.
The only solutions so far to Europe's banking and debt crises have involved either printing more money or increasing funds to allow governments to borrow more. Yet borrowing too much got most of Europe into this problem in the first place, and it doesn't look like it's working. In the end, these economic forecasts paint a picture of failure and a lack of answers. Laurence, Al Jazeera, London.